Okay, so welcome to this video. In this video, we've got a live training session taking place, and we have trainings taking place Monday, Tuesday, Wednesday and Thursday, and this is our Wednesday agenda. So in the course of the next 60 minutes or thereabouts, we're going to cover the following 8 points. In fact, we're not going to cover the Wednesday, we're going to cover the Tuesday, not the Thursday. I'll get it right eventually. Right, okay, so welcome to this training session. We have training sessions with GLOBIT Wealth Academy 4 times a week. That's Monday, Tuesday, Wednesday and Thursday. We're now going to go through the Tuesday agenda, and here are the following points we're going to be covering during the course of this 60-minute training session. And let me read them as follows. So first of all, we're going to show you how to close an order. Secondly, I'm going to talk about your trading history. The third point, what are peaks and troughs? Number 4, what are resistance levels? Number 5, recognizing the general trend. Number 6, we'll be talking about mini trends, breakout trends, and general trends. Number 7, adding trend lines and tram lines. Number 8, adding horizontal lines. Number 9, planning pending orders. And number 10, recognizing a profitable trade. So let's meet some of our students. Some have got more experience than others, but welcome to all our students calling in from different parts of Spain and also from the UK. And for the course of this training session, I'm going to introduce you to Harry Wright. And Harry's calling in from Bristol. Hello, Harry. And
hello, everyone.
Yes, hello, Harry.
Hello, Harry.
And so if you can share your screen, Harry.
Sure.
We'll get started on.
Yep.
Okay. So we're going to cover right. Okay, so if you go to your platform, Harry.
Yeah, sure. Wow. That's a bit slow, isn't it? There we are.
Perfect. Okay, right. Okay, so the first thing we're going to talk about is closing an order. So if you'll go to how to open an order, then we can show how to close an order. Have you got any orders open at the moment, Harry?
Yes, I have. I can close one for you anytime.
Okay, well, I think probably for the sake of this training, the most important thing is if we show, first of all, how to open an order. We're not going to give it any consideration as to what type of order to open. Let's just open an order and then let's show people how to close it, because that's really what this is all about, how to close an order. So first of all, we'll open one.
Okay, well, we're on the MT4 platform.
I'll leave it to you whether you want to buy, whether you want to do a buy or a sell. It's up to you.
On the top menu here, you can see the top menu, new order. Now you can find the new order in that place, or you can actually do it on tools, a new order there. So there's a number of places you can go to actually find it. Okay, so I'm going to go to the new order button, and up it comes. This is a little pro form to set it up. Now, the first thing you should really always do before putting an order on, before putting a trade on, is take a look at the volume, because you do not want to put a huge amount onto a trade for a trade that isn't going to be a strong one. So you must set that up, anything from 0.01, from anything from 0.01 of a lot right through to, well, if you've got a vast amount to trade with, you could go right up to 8 in this case. Okay, but what I'm going to do is I'm going to go to, just for the sake of putting it on, I'll put a 0.01 on. All right. That's a small amount of money. In terms of pounds, it's actually only pence. And then the next little box you go to is either the sell or the buy. Now the sell is to anticipate that the trade is going to go down, and the buy is to anticipate that the trade is going to go up. So you have made the decision before you come to do this, and you will therefore know whether it's a buy or a sell. I'm going to put a sell on.
Okay.
It's only a small one, so I'm not going to lose anything if it went up. Now, that's all you do is click the sell.
Okay.
And you can see that a dotted line has occurred across there. And if I move this box out of the way, that dotted line should say sell.
Okay. And if you show on your history at the bottom, or on your trading history.
Yeah, I will. So that's the one we're talking about, sell 0.01.
Okay.
Now then, going down to trade, if you look at this little tab across the bottom, if you go to trade, then it shows you that very trade there. Look, it's a sell, it's a 0.01 size, it's on the DAX, and because that's what we're trading, and it tells you the date and the time that you put it on. So that's putting the trade on, and it's there, and as you can see, it's live. It's actually sitting at minus £3.64 at the moment, and that's because it always starts off negative. That's because you're always going to give a small fee like this to the broker. For every trade that put on, you will be levied a small fee. So you have to start from not from zero, from slightly behind. Okay, that's putting the trade on.
And you can also, Harry, do a right click on the screen, can't you? And that will open the menu. You do a right click.
To do what?
Well, it's another way of placing a trade, that's all.
Oh, I see. Yes, of course, another way of placing a trade. Right click anywhere in the space here, yeah, like so. And then you can go to trading, and then across here to new order. Okay. And then you get up the same thing. Exactly. Okay? So there are three ways in which we can put it on. There's that way. There's tools, new order, that way. And the way that we did it, the actual button which says that's it. So you're spoiled for choice. You've got three ways of putting a trade on. Okay. And sometimes it's very important to be able to do that very quickly, because the market might be moving fairly quickly, and you need to put the trade on before it runs away.
Exactly. And that's probably a good time to mention the fact that we can download the MetaTrader 4 app onto our phone, because at the moment we're showing the trading platform on a computer, which is fine, which is the best place to do all your planning from. But you can open trades and close trades straight from your smartphone, and literally you can open them, close them literally within a split second. So that works well. So in terms of closing that trade, Harry, can you just show how to close that trade?
Okay. Well, here we go. The first thing you should be doing is keeping an eye on the trade. Now, at this particular setting, you'll see that I'm not zoomed out. I'm not zoomed in. I'm zoomed out. So you're seeing all the little tiny zigzags as a blur. But if you are normally trading and keeping your eye on that trade, you'll be observing the candles, as we call them, and whether or not this line here, this white line here, which is what the trade level is, you'll notice whether it's going up or down. And in this case, it's going slightly down. It's in the red. If it was going up, it would be in the green. Okay. So you keep your eye on the trade then. And if this happens to be the time when you say, yep, I'm happy with this trade, it's done what I've wanted. I can't say that honestly here, because you know, it's negative. And I have an aversion to closing a trade when it's negative.
Well, I'll tell
I
you what,
wouldn't.
Harry, if you want to, you can leave it open. But if you want to actually close that trade, we just click the cross to the right
Yeah,
of that
it's
number.
okay. I'll do it just
Okay.
for the sake of doing it. It's only £3. That's why I put a small trade on. You see.
Yeah, I know.
Okay, so believe it or not, all there is to securing that trade under normal circumstances with a profit, all you would do is keep your eye on how much it is, and you just click the little cross. And under normal circumstances, you'll hear like a gunshot go off, and that was
Okay.
it.
That's excellent.
It's
Okay, so that covers
it's
how to close an order. We're now going to move on to your trading history. So, can you explain what that
Yep.
is? You can show your personal.
Yes, of course. Well, all the trades that you've put on and you've taken off, and hopefully you've been very successful on, you can see the history along the tab at the bottom. Okay. Notice it says trade, exposure, and account history. Click on account history, and underneath your trading platform, you'll see all the trades that have matured and that you've cancelled. Now look, there's my little minus 3.23, right? I've just cancelled that. So all this history today is here. Okay. You'll see that today, if you follow along on the left-hand side, you'll see that trade was put on yesterday on the 30th. But if you come along to here as to when the time was that I cancelled it, or at least it cancelled automatically, was today. Look, early morning this morning, 7:01.
Okay.
And the green line here tells you that it was take a profit. So it was an automatically closing trade. It closed automatically, and it gave me 387 at 7:01 this morning.
Okay, so looking at that top trade then, each order has an order ticket number on the far left.
Yep.
And in fact, those orders and those orders also are shown on the screen as well. So where that dotted line is, it also shows you the order number, can you see? Which tallies with those numbers on the left at the bottom. Okay, that's right. And then on the next column to the right, it shows the exact time and the exact day the order was placed. Okay, so this is Harry's trading history, and you'll have the same history on your platform. On the next column, it shows whether it was a buy or a sell. Remember that we buy if we believe the market's going up in value, and we sell if we think the market's going down in value. And then the next column, as Harry was explaining, it's important that when you place the order, you decide whether you want to place a mini lot or a standard lot. You can place a trade for less than a lot, which would be a mini lot, which might be 0.5 or 0.6 or 0.3. We've got an example there of a trade. It's a buy with one lot, and all those that show in this history, they're all one lots apart from one that was 0.01, as you can see further down. Okay, and on the next column it shows what instrument was he trading. Well, they're all future contracts on the DAX indices. Okay, the top 30 companies in Germany. That's what we're recommending to all our traders, because the German DAX is quite volatile, and it moves typically about 200 points every day. And if we can take out 30 points of that at any time of the day, we're going to have a very, very profitable trading experience. Then the next column along, that was the price that that was the price at the time the order was taken. So the DAX then was 11,365. Okay.
Yeah. So
That's
that was, let's see where it was. 11,363 is there. All right,
okay.
and that's where that particular trade was before I cancelled it.
Okay. And in the next column, it's talking about stop loss, or S/L. That means stop loss. So what you can do is when you place a trade, you can include what we call a stop loss, and the stop loss will minimize your loss if you're about to make a loss, so you can reduce the risk level. Now, I believe if you're supervising your trade and you're literally watching it minute by minute, then having a stop loss isn't so important. If you're going to leave your computer, then it probably is very, very important. But if you're sitting there monitoring it, supervising it, and managing the trade, then probably a stop loss isn't so important, and that's presumably why Harry hasn't put a stop loss on his trades.
Correct.
Okay. Now the next column along, T stroke P. Every trade that you set up, you can set it up with what we call a take profit. So if Harry there has purchased or bought the DAX, he's obviously expecting the value of the DAX to appreciate. And if he took it out at 11,365, he's hoping to close it at 11,397. So that's about 32 points.
Correct.
Which is absolutely brilliant. So on a future session, we'll show you all about take profit and all about stop losses. On the next column, it shows when the trade was closed. And on the next column along, it shows the price that it was closed at. And as you can see, Harry set up a take profit of 11,397. In fact, 11,397.8. And because it was set up with a take profit, that's what it closed with. It closed at 11,397.8. And therefore, when Harry placed the trade, he knew exactly how much profit he was going to make. And that profit was £387.04. Okay, and that explains the trading history. And you can actually print off that, but it goes back through the whole of the history. If you do a right click, Harry, on that trading section, you can actually see see all the history, or the last 3 months, or the last month, or if you want a custom period, if you want to know how much what your trading history looked like on the last week of July, for example, you can do a custom period. You can save it as a report, and you can look at commissions, taxes, comments, and all that kind of thing. So that's all to do with your trading history. Very, very useful. Right, so moving on. The next thing we're going to look at are peaks and troughs. If you'd like to go to the 1 hour chart, Harry.
Yeah, sure.
Okay. And if you maybe just zoom out a little bit. Okay, there's a good example. Now, Harry will show you what we call peaks and troughs.
Well, where should we do it? Here? Peak?
Yep, yep.
There are peaks.
Okay.
And there are troughs.
Okay. And if you give some more examples.
Yeah, there are peaks. Pretty obvious, the peaks are at the top.
Well, the peak really, it's like a mountain range. You've got little mini mountains, but the peak is the peak. So that's the peak really there.
Yeah.
If you move across, you've got another peak to the far left there.
Oh yeah, there's another peak. Yeah.
Yeah, and two more. But the one of most significance is the highest peak. Okay, which is the first one that I was looking at. If you just bring your mouse down, Harry. Well, you've got there, and then you've got the highest. So we're really looking at the peaks, because this is really important. And we'll talk about how to consider these peaks and troughs a little bit later. But they're the peaks. In other words, the highest levels that the chart has reached in that time frame. So Harry's just pointing them out now. There's one there. There's one other one there. There's another one to the left, and another one there. These are all examples of peaks on the chart. So if we now look at troughs, okay, these are the troughs. Okay, there's a trough to the right. There's another trough. And something which is also worth commenting is the distance between the peak and the trough is quoted as the trading range. Now, the DAX will trade typically anywhere between those two values on average. Now, of course, it will break out from time to time, but typically it operates anywhere between the peak and the trough, and that is called the trading range. All right. Now, we're going to move on to what are resistance levels.
Okay.
All right. So if you will, you've got quite a few lines on there, Harry, but if you
Yes,
will,
I was trying to get rid of some of them.
yeah,
I'm just getting rid of these now.
okay.
Horizontal line.
You can put a cross in all those if you like.
Yeah.
Okay.
Yeah, I'll put a cross in all of them. Okay.
Right.
That's it. I got rid of all my lines.
Okay. And on a previous video, we've also talked about the moving averages, which is the 50 and the 200. And that's what you can see Harry's got there. We've got the 200, which is the yellow one. And we've got the 50, which is the red one. Now, those are very important. We have talked about them on a previous video, but I'll talk about them again. The significance of the moving averages is, as a general rule, if the market is trading below the 200, then typically the market is going down in volume. And you can see, although it's gone up at times, typically the market has been well below the 200 all the time, and therefore generally the trend has been downwards. Okay, so if you've been wanting to make money on the DAX, generally you should have been selling. Okay, generally. So that's how we apply the 200 moving average. The 50 moving average is the red one. And although the trend has been generally downwards, as you can see, when the market crosses the 50, the general rule is that it's an indication that the market could be changing direction. And if Harry, there we've got an example you can see. The market was going down, but where Harry's got his mouse right now, it crossed the 50, and of course the market was going up in volume. Okay, so these are only just to give you a general rule, But if Harry now puts on some resistance levels on the peaks and the troughs, in fact, what we'll need to do, Harry, we'll need to zoom in to see more closely those candlesticks. A little bit more. Okay, I'll tell you what, let's zoom out. And we can zoom out, we can put the resistance levels in when we zoom out, and then we can still see them when we zoom in.
Okay.
You see what I'm saying? So if you zoom out a little bit more, that's perfect. And put in the, where should we put them in now then? So, well, I suppose we really need to see that a little bit more in close detail, don't we? Where the market's been today. So,
yeah, we do.
Yeah, so let's zoom in and see what's happening there. It's a very interesting point, actually. If you just zoom out again, Harry, the reason I think it's in a very interesting place, because if you just zoom out a bit more, Harry, because you can see, can you see that gap? I'm presuming you've got the trading day.
Yeah, that was last night. It opened up this morning.
Exactly. So that's today, Wednesday. Then you've got the previous day, which was Tuesday. But where it is right now, there's an open gap. You see, I'm looking across onto the left, Harry. Up to the left of the 50, of the moving average 50.
Oh, sorry, you're talking about there, between there and there?
Well, if you move your mouse across to the left, right 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 across to the right across to the left, you've got that gap, which is quite interesting. But anyway, if you zoom in,
well, it's only there. It's just because it's gone down.
Yeah, well, that's okay. I like those.
Yeah, I do too.
If you zoom in,
there was one last night. Go on.
If you zoom in, and let's have a look at these candlesticks more closely. Today's. And this is the what time frame is this, Harry?
That's 15.
Okay, shall we look at the 1 hour one first?
Yeah, at the 1 hour. Yeah, okay.
Okay, excellent. Okay, right. That's the 1 hour one, is it?
That's 1 hour.
Okay, let's look at the 15-minute, the 30-minute one.
30-minute one is there.
Okay, great. Right, shall we just zoom in just a little bit? Right, okay, that'll do nicely. Right, let's put on a resistance level then.
Yeah.
Can you see that third candlestick along? It's got a long tail on.
This one.
That's right, that one. If you put a resistance level right at the bottom of that tail, there. Okay, because that's relevant. Then we can put another horizontal line at the bottom of that red and green one. That's right, those two.
We're there.
Yeah, the red and the green one together. If you not necessarily the bottom of the bottom there. Perfect. That's right. And more relevant relative to where we are right now, you've got that green candlestick. Can you see the one in the centre of the screen there?
That one?
No, to the left, Harry. To the left. To the left. That one. If you put another horizontal line at the bottom of that one.
There?
No, it's 1, 2, 3, 4. It's in the middle of the screen. It's the green one.
Are you talking about this one?
Yeah. Yeah. If you put another horizontal line at the bottom of that one. That's right. Right, okay. And the market at the moment, I can't quite see, but the market at the moment is what value?
It's at 11,451.
Okay. And what's the value of that horizontal line you've put in that one there?
It's 11,429.
Excellent. Okay, so if I subtract the two, you've got
21.
22 points.
Yeah.
22 points. And if we go to the chart, if I go to this chart now, oh no, I don't want to do that. Well, I can do it. You will stop other people showing you want to do. Shall I go to the chart to show what 22 points will make?
Yep. Or if you wish, I can write it on the screen. I'll just write it on here.
Well, do you want me to tell you? I can tell you if you like.
Okay.
Inside the GLOBIT WhatsApp group, if we go to media links and docs, this is something that Paul was asking me today. Go to links, scroll down, looking for the green and red one, and I can tell you that if we put a trade on the DAX and we win 16 points, we're going to earn €205.76. So if we earn 24 points, we're going to earn 102.50, 102.85, about 9, 7, 16, 3, 8, 3, about 308 euros. Okay, so the purpose of this was to show you.
Did you say 32? Do you want 32?
It was 22, Harry.
22.
Exactly. So, I mean, as we're talking, you can see the market is already moving down towards it, so it's not 22 anymore. But hopefully you're getting the point of what I'm making. That red candlestick suggests that the market's going down, and what we're saying is it will probably go down to the bottom of that green candlestick, and that, when we've talked about it, represented 22 points, which is about 308 euros. So if we wanted to put a trade on, that would be a good trade. Okay. So what we're showing are resistance levels. That's right, resistance levels. Now, we've talked about recognizing the general trend. Well, the general trend we looked at, it was below the 200. We might need to go back on that a little bit and talk about general trends a bit more. But what we've done, we've just identified a good trade there. We could sell the DAX and possibly make 22 points, which would earn us about 308 euros. Okay, so let's talk a little bit more about recognizing the general trend. So you can see that the trend is downwards, but although it's downwards, it does have moments when it goes up. And is there anything you want to say about the general trend, Harry?
Yeah, sure. Righto. Well, the general trend, people can see that I've just been hurriedly putting, oh, sorry, just a minute. I've been hurriedly putting on my lines down here, following the general trend of the trade.
Yeah.
So it's all within those two bars there, those two lines. All right. But it has broken out today. It's broken out up here today. All right. So the general trend still exists. However, if we now look at the detail here, the trend at the moment, the trend today, quite frankly, it looks as though it's just been going sideways. However, within that, there's a mini trend or two, which I can expand a bit. Now, this is where I made my money this morning, going down here. Yeah, down there. So I will just show you that. It's amazing how much, even though you've only got a couple of bars, it's amazing what it does to your perception of where you should be thinking of placing your trades. I mean, I'm not being accurate here, but I'm just saying, look, there's a possibility of a trend happening down there. Yeah. And there's also another one going up. I mean, because it's been going generally along, there's been tiny mini ones going down and up and down and along. And this is what I did this morning. I waited until I could identify that there was a sort of trend happening, a small one, and I put my trades on and picked off the money. As you can see, 156, 111, those sort of amounts.
So the trend for today, it's neither been up nor down really.
Exactly.
You can still make profit as long as you can see what's actually happening.
Yeah, but you do have to keep a closer eye on it, because it only goes for a short while and then it goes back up the other way.
Yeah.
And so you get left with your trousers down, if you'll excuse the expression.
Yeah.
And that's why I still have a trade left on here today.
So basically, talking about these trends, we saw a good example previously of a general trend where the trend was definitely downwards.
Yeah.
But where Harry's put on that horizontal line at the bottom of the red and the green one, if you just move your mouse across, that one there, exactly. If the market comes below there, it's what you would call a breakout trend, because it's gone below the resistance level. Okay, yeah. So that would become a very interesting trade, because it's broken the current resistance. Likewise, if you just put your mouse on the top of those, the red and the green one, not so much there, those two there. If the market goes above those two, that would be considered another breakout, because it's gone up in the upwards direction. So we're keeping an eye on whether it's breaking the if it's a breakout trend. But at the moment, Harry's been making money with a mini trend, which is either going upwards or downwards. But we do have to have a look to see where that is in relation to those horizontal lines and any tram lines that might have been added to the screen. Right, okay, so we've talked about mini trends, breakout trends, general trends. If you can just show, Harry, how to actually add these lines. That's quite simple.
Yes, of course.
Adding trend lines, tram lines, horizontal lines. Because it's important that when we open our screen, that the first half an hour or so, we put on the lines, the horizontal lines, the trend lines, the tram lines, so we can identify what is the market range.
I think one thing you want to do, and that is, as I've just indicated, you do not want to get confused with all the lines. So, you know, every time you put a line on, make sure that you know what you're doing and why you're doing it, and take it off if it's not necessary and confusing. And the only ones I'm leaving on are the two moving averages at the moment, because they are telling me something, you know, at this particular point. Perhaps.
And of course, the fact that the market right now is above the 200, and it's also above the 50, would suggest that, you know, perhaps tomorrow it might be a good day for seeing the DAX rise in value.
Yeah, indeed. And by the way, that's what it said on the news today, that all the major indices are, you know, up a couple of percentage points.
Yeah. So if you're allocating a time to do your trading, the DAX opens at 8 o'clock in the morning, Central European time, which is 7 o'clock GMT time. If you can make a habit of catching the DAX first thing in the morning, you know, 8 o'clock, you can do your planning and preparation between 8 and 8:30, and then by 8:30 or so, you can be placing your first trades. And by about 10 o'clock, you've probably made yourself £500 or £600 or so, and you can close the platform for the day.
Certainly by 8 o'clock this morning, this was, you know, from last night it had gone right up, and we were then up here.
Yeah.
And this is where I picked up on it this morning, and I said, which way is it going to go? I put my little pilot trade on to see which way it was going, sniffing it out, and it said it was going down. So I picked up that downward trend there. Okay.
Obviously, you're choosing your trades from the 1 hour chart and the 30-minute chart, but you're really actually trading using the 15-minute and the 1 minute.
Absolutely. 15 minutes there, and the 1 minute, of course, where you've got much more volatility or apparent volatility.
Exactly.
Just that you can see more action.
You see, we've already determined from the 15-minute chart that it's a good time to sell the DAX for all the reasons that we've talked about. And yet, when you go to the 1 minute chart, you can see that it really is a good time to sell the DAX. So that just confirms what you've already thought.
Yeah, indeed.
So that's how we choose a trade. So we choose our trade by analysing the market with the 1 hour chart and the 30-minute chart. And then we look at the 15-minute chart. And if that's consistent and the 1 minute chart is still consistent, then that's a fantastic time to trade. That's what we're looking for. We're looking for consistent information. Look at it going down now, you see. So while we've been talking for the last 15 minutes, we could have made, 300 or so.
Yeah, easily.
Easily, 400. And that's just with a one lot size.
Indeed.
Okay. So that's really interesting. So that's great. So if you just show how to put those.
Yeah. Right. So that here we go. I'm going to show you how to, if you know how to put a line on, very easy thing to do, but it's deciding where the line should be. As Malcolm said, take these two top points here. That would be perhaps the limit of where it's going to go to in the short term. So I'm going to put a horizontal line on there. Now go over to the menu, and there's a little horizontal line there, look. You click on there, and then you move your mouse across, and you can see a little cross. Well, if you want to put it on there, it'll go right across the screen if I click there. There you are.
And of course, more important, the market is moving pretty quickly. We need to know where's it heading. So that's what our major consideration is. Where's it heading?
That's right. So is it heading down? Is it going to go down as far as there?
That's what I would be thinking.
That's what I would be thinking too, because look, there's quite a lot of points down here, look, that it'll pick up. It'll pick up that one, that one, and that one. And the first one that you come across is there.
Is that one, exactly. So if you put a line on there.
Yeah. So here we go. This is the likely first point to which it's going to go. So beware when it goes down to there, it might go straight back up again.
Exactly, exactly.
So don't go putting trades on willy-nilly. As soon as you take one off, don't put a new one on there, because I keep on using this analogy. You'll be left with your trousers down, and
Yeah.
you'll be
Exactly, exactly.
wishing that you'd looked across at that point there.
And that's why it's so important that you put the horizontal lines on first. And
Yep.
by putting that horizontal line on first, you can calculate what that trade is potentially worth if it materializes.
Yeah.
And that's how we calculate it was worth 22 points, which was 308 euros. So that's the horizontal lines. The tram lines.
Yeah, tram line. I'll put a tram line on. I need to zoom out for that,
Yeah,
so
exactly.
that you can see. Well, let's just put the last bit on. How about that? This bit in. I don't know whether you can see that as a downward trend, but
Well, to be honest, even that one on the far left, you can.
there we are.
Yeah, yeah.
If I can hit the peak there, and then bring it down to some.
I'll tell you what, Harry. If you draw, yeah, that's fine. And you've also got another tram line. If you can take it from the top left down to, I'll show you where, Harry. Bring another line from the top left. Show you where to bring it to.
You mean from the same point?
Yeah, exactly. And bring it. That's right. Just bring it to this other peak. Can you see this other peak? That's right. That one. This one. Just drop it down a bit. Just drop it down.
I can't drop it down. I have to get rid of that one now.
All right. Okay. You see what the peak I'm talking about?
Yeah. Let me just get rid of that one. Okay. Right. I think everybody's getting the idea that if you want to put tram lines on or trend lines on,
but just put one on, because I just want to point out something actually, Harry. Just put one on there and bring it down to this peak. Can you see?
Whereabouts?
That's it exactly.
You sure?
Yeah, just touch those two peaks. That peak. That's that one. No. You.
Oh, you said yes, that one.
No. Do
you mean the one before it?
No, you've got. Can you see those two peaks? If you put your mouse on, I'll show you which one I mean.
Those two?
No, not those. No.
Here?
That's right. The peak on the right, that one.
That one.
So if you bring a line down from the top left,
you want that one. Okay. Well, look, what I'm going to do is I'm going to click on the right objects list. Right, I'll start again on this one.
Okay.
So you're talking about that one?
Right, exactly, right, okay. Now, the reason I wanted to show that is because although we're talking about tram lines and trend lines, etc. at the moment, there's also something which is very commonly used in trading called Fibonacci. And Fibonacci is, you have something called Fibonacci retracement, okay? And there's a perfect example of how you can apply the rules of what's called Fibonacci retracement. So basically what it is, you can see how the market of the value of the DAX was falling in line with that trend line that Harry's put on there. But then of course it reached the resistance level at the bottom and then started the one to the right there, Harry, the next one to the right, that's right, it reached a resistance level there which bounced back off that resistance level 3 or 4 times and then started retracing back upwards again, okay? So what the rules of Fibonacci say is it will rebounce to, I've got numbers here, I'm quoting here, 38%. So basically, 38%, if you add 38% of the value of the number at the bottom of that trough there, then that would be a level to take profit.
Right, so you could work out where to take the profits
Exactly.
up here.
So basically, with Fibonacci, what you do, you put on four lines, one which is 38%, one which is 50%, one which is 62%, and one which is 79%.
Yeah.
Because the question is
going up the
exactly,
incline.
it's retracing. Because the question is, well, how high is it going to go? Well, that's when you use Fibonacci. And if you want to know a bit more about Fibonacci, just watch some videos on YouTube, and you'll find some interesting videos on how that works. But basically, it's when the market rebounds against the general trend. And you're looking for those rebound levels of 38%, 50, 62, and 79%. And sometimes it will actually rebound higher than the overall trend, where you get an extension of 127% and 162%.
Yeah.
So that's interesting. Anyway, back to our point where we were. Right, okay. So we've shown how easy it is to put trend lines on, horizontal lines. Now, we've got two more things to cover on this training session: planning a pending order and recognizing a profitable trade. So this is really interesting. Planning a pending order. So if you can zoom in, Harry, on the 15 minutes and the 30-minute chart, let's see if we can plan a good order. Well, I think we can, to be honest, because you can see the market's falling. So clearly, that looks quite interesting. There's a definite trend downwards. So we want to know, where's it likely to be heading? So we've already put that horizontal line in. So that's where we think it's heading. And that looks like a profitable trade. So what are those two levels now, Harry? Because it was about 22 points. It's probably not as many now.
Probably about 15 or something. Let's take a look. The 2 points are 11, 428, 429.
I tell you what, even from just taking a quick glance, I'd be putting a trade on that.
Okay.
What do you think?
Shall we put a trade on? I'll put a trade on, yeah?
Yeah, put a sell on.
Okay. New order, do it quickly, look. What value do you want?
Before you do that, it might be just a safe thing, just to have a quick look at the 1 minute chart.
Okay.
To see if it's consistent with what we think. Because if it is, so much the better. No, you see it isn't consistent. So looking at the 1 minute chart, you can see it's already had a peak. Now, is it going to continue, or is it going to go down? Can you see what I'm saying?
Yeah. It's finished.
Yeah, exactly.
It's on its way back up now.
When you say on its way back up, if you just go back, if you just draw a horizontal line in, Harry.
Wait a minute. There's your horizontal line there.
Yeah.
There. You want to put another one? You want to put it there?
On the 1 minute one. Go into the 1 minute one.
1 minute. Okay.
Right. So, well, if you look on the peak there of the green and the red one, the peak, Harry, in the center.
The peak.
In the center, there.
Yeah, there.
That's right. Just stick a horizontal line in there. Right. That's what we're watching out for. But if it drops below this peak, then that downward trend is continuing, which it is. So now I would say, yeah, put that trade on. Sell, because that trend is continuing.
Yeah, you want me to put it on now, yeah?
Yeah.
I did put a sell on, didn't I? Yes, I did.
Did you?
Yeah, I did. And look, it's doing quite well. Look, 23.
Okay. What's it making now?
Just about 20, that's all.
20, okay. Now, if we go back to the 15-minute chart,
it's all right. I've taken the 20.
Okay. Okay.
My instinct says don't faff around because it's going to go back up. I'll lose it.
Okay. Good.
So I've cashed in.
Okay.
All right.
But if you just look at the 15-minute chart, and because we were talking about recognizing profitable trades, if you look at the 15-minute chart.
Yeah. 15-minute chart coming up.
Okay. Excellent. Okay. So I would say that there's more money. There's more money to be had from that.
Yeah, there is. Look.
The trade's still on.
I thought I'd killed it.
No, the trade's still there.
So it's not letting me do it.
There's more money to be made from that trade.
Yeah.
So, think you can close that, Harry?
I'd like to close it, but I couldn't.
Well, what's the issue?
I don't know what the issue is. That's quite interesting.
Can you not close it on your?
Perhaps it's less than 40 points.
No, but it's on now. The trade's on.
It's on, isn't it? Yeah, that's right.
Can you not close it on your phone?
Did I what?
Can you close it on your phone?
I'll try.
Have you got it?
Yeah, I've just tried to close it. Has it done it? It says close with profit 19.99. Yes. No, it won't let me. Market is closed because the market's closed.
Well, it shouldn't be closed at this time of night.
Well, it says the market is closed.
Maybe it's closed early. Maybe they've got some holiday or something.
Yeah. Look,
it's Halloween, right? It's Halloween, so it could be that.
Yeah.
It could be.
It could be. It could be. So that completes our training session. We've had 60 minutes of training there. If we now just stop sharing the screen, we'll just have a chance for a few questions and answers. And any questions and answers? Any thoughts on what you've seen? Anybody?
Yeah, I felt today, I had a feeling that the market was going to turn as well, because when we spoke last time, you said if it breaks the trend line, there's a chance that it's going to be a change in trend. Yeah. So I actually made a bit of money on buying the DAX today rather than selling it.
Interesting. Well, you
however,
could.
I placed one last trade at the end of the day, and to be honest, I was so busy today at work, I wasn't completely focused. I placed the trade on at about 6 o'clock, but it's gone down massively. So I'm down like 200 on an open trade at the moment. But I do feel like the market's going to pick up again tomorrow. Yep. So I left it open.
Well, as a general rule, I think you need to have all your trades closed by when the market closes.
Yeah.
Don't leave trades open overnight.
Right.
And as I've said several times, when you do your trading, shut off all distractions. No phones, no Facebook, no television, no conversations. Just dedicate some time. Do your preparation.
No sex. Sorry.
Exactly. None of that. No fun and games.
Did you see that? Half of us didn't know what it meant.
Well, the problem is, Harry, some of you have forgotten.
Go on then.
So yeah, just consider each and every trade that you place and have no distractions, and you'll have a profitable experience, I think.
Yeah.
So that's it. Any question from you, Paul Senior?
Yes, I'm still a bit confused when throughout the day when the M50 goes over the M200. I don't know if it's because it's against. It's not against it's against what you said.
How do you mean? You mean when the two cross?
Yes. Yeah.
Well, what I would say with the 50 and the 200 is only bear them in mind as a general indication. So generally, if the market's below the 200, it's going down.
Yeah.
If the market crosses the 50, it's changing direction. That's only a general rule. But what's more important is looking for the resistance levels, the peaks and troughs,
Okay.
and putting in your horizontal lines.
Okay.
Okay. And if when you look at your different time frames and everything else is telling you the same story, then that's a great trade.
Okay. Right.
Yeah.
Yeah, Malcolm, may I just say I agree with Paul that it is confusing when we show the moving averages as being something that's of value. We give a general guideline as to what it might indicate, but we do say that it doesn't always indicate. It really doesn't. What you have to do is you have to think back to what is a moving average? What is it made up of? And if you think that, well, the 200 moving average is actually the average value of 200 closing days in the past, from today going backwards. And so, it's only a general guideline. It really is. And I mean, they can only work together by telling you that they agree with each other in certain cases, but in other cases they go way apart. So it really isn't a precise science. It's something that just gives you, like, it tells you, you put your wet finger in the air and you say, I think it's going to be windy today. It's that sort of thing.
That's about how important it is.
Yeah, it isn't the be all and end all.
No.
Yeah, and I agree with what Malcolm said. There's only one real thing you can say, and that is that if the trade is below the 200 moving average, then it is usually a downward trend.
And if it's above, Harry, it's probably an upward trend, but not always.
It could be an upward trend, but it could also be just changing direction, and that's the trouble.
What's most important is just take that on board as a general indicator. Yeah. But what's most important before you place in your trades, you put on your horizontal lines and looking for peaks and troughs. Yeah. That's what we're looking for.
Right. So don't get too worried, Paul.
Thank you.
You often get the problem of trying to close a trade. I had one and it was 124, and it must have taken me about 10 efforts to close the trade. It was gone down to 22 before it actually closed for me.
Well, just like I had this problem a moment ago.
Yeah, but that was because the server was gone down. But do you ever have that problem otherwise?
True. But you're having trouble in closing the trade physically.
Yeah, physically. You keep pressing the button and you keep resisting it, and you get bong, bong, bong every time you hit it. But it still doesn't do anything. And I had lost 100 euros while it was doing that.
Well, what can we say? I mean...
Well, I just want to know, does it happen to other people, or is it just something on my computer?
Today I was trying to close a trade. And did it keep asking you a question saying, do you want to close it at the new rate?
I've had that, yeah.
I've had that today as well.
Is that what you're talking about, Dave?
That's what I'm talking about, yes.
I think is it because it's changing so quickly or not?
I don't know. That's why I was asking to know, did other people have the same problem?
I had that problem today, yeah.
Generally not. Generally not.
No.
I did have it today 3 times.
Right.
I had to go back on it again, and then I went to close trade, and then it closed.
Well, I'll tell you what, if we want a good answer...
I've had it up to 10 times. I lost 100 euros at one stage because it wouldn't close. It kept resisting it.
If we want a good answer, I think just send a support ticket and say, can you please explain why, when I attempt to close the trade, do I get a requote?
Well, I just wanted to know, first of all, was it a problem that I was only having?
No.
Right,
no.
okay.
I've not had that.
what I'll do is I'll take a screenshot the next time it happens, because a question comes up, and then I'll show you guys it.
That's a good idea.
Yeah.
Thanks, Paul.
I know what you're referring to. I've had the experience, but if we send a support ticket in to find out what the correct answer is, it'll be interesting.
Yeah, no, I don't mind so long as I'm not the only one that happened.
No,
I thought it might be my computer or something.
You're not the only one. You're not the only one. So that's it, I think. We've got Graham's probably muted himself, I guess.
Graham, can you hear us?
Yeah.
You've got a mute, I think, on your microphone.
I've unmuted.
You're aware of that, yeah? Okay.
I've unmuted.
Okay.
Okay. Anyway, so thank you for tonight. We got there without any technical hitches. It has been recorded, and what I'll do, I'll record them, all these things, as we complete these training sessions, and we'll save the best ones. So, opportunity meetings obviously are 3 times a week. So anybody that you've got that's curious, just get them to the opportunity presentation, and let's see if we can start building a team.
Okay, now.
Okay.
Thank you, Malcolm. Thank you, Malcolm.
Thanks a lot. See you soon. All the best.
Right,
I'll
take
see
care.
you.
Okay, good night, bye-bye. Thank you.
Bye.
See you, lads.